TGIF, everybody. I want to start off by acknowledging one of our loyal members, Ziggy, who every day goes on Twitter and has a great saying. And TGIF is trade good in faith, trade great in faith. Ziggy, thank you for all your support of our trading community over all these years. Want to acknowledge that. My trading warrior brother. Thank you.
I second that.
Here. Yeah, here.
Okay, so I mean, that's what I mean. We are a family because you know what?
China to levy retaliatory tariffs on another 75 billion of U.S. goods. That just came out.
Okay, so S&Ps came off pretty good. Dollar coming off a little bit. I kind of think, Blake, that if we're going to get a correction in the S&Ps, that was always the big question. What's going to happen to the dollar during a correction? There have been a few examples that risk off also means a lower dollar, which is a little bit different than what's been happening over the last few years. That's just my guess. So attempting the short side of Dixie up here as well, testing that 98.45 level, wrong over 880. So yeah. And look at what's happening to the yuan. Okay. So, I mean, we're pressing it. This is what really tells you if the trade war is subsiding, we're threatening new highs. So we'll see what Powell could pull out of his hat, huh, guys?
Yep.
Yeah.
Absolutely.
All right. Absolutely. So, I think it's going to be a big day. Before that news broke, Blake, I thought for sure, and I've been thinking all week that we're going to take out this buy stop at, buy stops here and maybe try this moving average, the daily, it comes in there too, up around this 2960 level, but maybe these people are survive. It's all up to Jay Powell. So I think he would like to see the dollar not strengthen. Okay, and I heard an interesting, you guys remember Paul McCulley, who used to be with Bill Gross at PIMCO? Guy's kind of an eccentric genius in the bond market. But, he says he's not a Trump man, and he doesn't like the way he's presenting it. But when he's right that, the Fed does need to move. So, it's interesting that a guy like that would, say something like that. So, it's all in the presentation, so people think it's crazy. But I don't know. If I was president and I thought the Fed was hamstringing me, I'd probably say something too. I know Steve Volge would. Anyway, I feel like I'm alone here. I guess I am. So that means that the yen pulls back from this resistance level.
Sorry, buddy, I'm trading. Sorry.
Okay, that's all right. That's okay. That's what we're here for, to trade great in face. In fact, we have the G6 +1. All right. Yeah, DJ says here, throw 100 point. How about an intermeeting cut? That's something Jim Welsh talked about. Why wait? I mean, if you want to get effect, why wait for the meeting? Catch people off guard. Maybe that happens. I don't think it'll happen today. But anyway.
Yeah, I want to see them attempt that. The moment they do something like that, the market is going to tank like nobody's business.
You think so? Yeah, I don't know.
It will show desperation, right?
Yeah. It will show extreme desperation. I believe that if they cut outside the meeting, the market is going to tank like nobody's business. I mean, I would bet a lot of money on that.
Oh, I know all about desperation. In fact, I went out singing Tuesday night for the first time in a few years, guys. and actually, that's my marketing tool for meeting women. That's how I met my wife. So I know about desperation. Okay, so I'm out there looking for love in all the wrong places, and no, not really. The Coyote Bar and Grill is not a bad place. So yeah, I mean, everything seems to be on hold until Powell speaks, I believe, in a little less than 2 hours, right? So what do you do? Do you really, if you're going to do anything in front of him, what do you think, guys? Small, go small ball and then react to it?
Most likely, yes. I would rather see what he does and react to that. See what he says actually, and react to that. In advance, if I had to guess, which is not a trading advice, and I wouldn't trade on that. But if I had to guess, unfortunately, we've seen that Powell doesn't really have a backbone. He might throw in a statement here and there to try to prove that they have some credibility and they're independent, but when it matters, he succumbs to pressure so far. So I have no reason to believe that it's going to be different.
Well, how about he has cover with the news that just came out about Chinese retaliation, because he has been talking about the uncertainty of the trade picture. So this gives him even more ammo that this uncertainty is turning into certainty of a continuation of the trade war. Would give him some cover to act, don't you think?
The Fed is using the US-China trade war as an excuse. Trump is going to use the Fed's monetary policy stance as an excuse, but the truth lies with neither. There
was a piece of news I have to push back, and this was something Jim Wells talked about before it happened, that all the weakness here was, like globally, was in manufacturing, and we had the consumer ISM or whatever it is come out, and for the first time it was under 50. Consumer being 2/3 of the economy in the US. If the consumer's really weakening, that's it.
Oh yeah. Absolutely.
Okay,
no
so I
question
mean,
about
there are some reasons that there is weakening out there of the
but Coach,
global economy.
keep in mind that consumer credit has been expanding in a faster pace in a long time than consumption, which means that anyhow we knew that this was an unsustainable path, because when you know that the consumer is consuming by expanding credit, so just by borrowing more money and doing so, there is a limit, there is a time limit to that behavior, right?
Yeah.
So yes, there are circumstances that can, bring the end to that party a little bit faster or a little bit slower, but the fact that it was unsustainable is a given fact. I've been reading time and time again.
Steve, tighten a half here. It's in September.
Say again, Coach.
Should he tighten?
If he should tighten,
do you think he should tighten?
If you're asking me what central banks should be doing,
close their doors.
Letting capitalism work, which would imply much higher rate.
Too late.
It would be a very, very very painful medicine, but the patient would end up after a big crisis surviving, and the economies would rebalance in a proper manner, and economic behavior would go back to rational. What they've been doing is the exact opposite. They've been giving to a drug addict more and more heroin, postponing the
withdrawal from opium. Well, you know what? What a great drug dealer, because most drug dealers would squeeze their clients, so the Fed is doing it, and making people rich. Anyway, I don't know. I think in 2008 we'd probably be coming out of it now after a 10-year recession, depression. Now, I don't know. I think we'd have to get the whole reset you're talking about in currencies and a whole new system. I don't think we could go back to what we had before when things unravel this time. How about you?
I have a comment. I think what Steve is saying is absolutely right, and the number we need to be focusing on is 20 trillion, which is the debt.
Yeah.
And imagine you're a person and you owe $50,000 on credit cards. What's the way to get out of it? To lower the rates that you're paying on the interest? No. To
bankruptcy.
to get either bankruptcy or to get to a point where you're actually saving money every month or every year and you're paying back the debt. Obviously, paying back the debt is never going to happen with Western economies anymore, I don't think.
Right.
So they do the next best thing, which is to lower the interest payments. But that can only work so far.
So
Yeah,
we're not leading it. We're not leading it. We're not leading this interest rate decline and the chase for yields. Europe's leading it.
I have a counter argument to that, which is the following. The US is going to have a real deficit this year of roughly 2 trillion. Meaning that's how much the debt is going to expand within a year, because I remind you that a lot of items of the deficit are categorized as off-budget items. That is roughly 10% of GDP. It's a little bit less. Let's say it's 8-9% of GDP.
Yeah.
Can you show me another developed economy which currently runs at an 8 to 9% budget deficit? So I'm not that
I don't
sure.
know.
I don't know.
I do have advice about what Sal said about the 50K on credit cards. If you owe 50K in credit cards, get into the bank for another $500,000 and they'll work with you. All right, is that right? Sal, I mean, the deeper you're in with them, the more accommodative they'll be. So I'm sorry, Steve. Go ahead, bro.
No. That is very true. I agree with you. You know,
I'll do that next time.
You owe 50,000, it's your problem. You owe 5 million, it's their problem.
Okay.
That's a strategy I've learned over my years of my own financial experiment. Okay.
Too bad you don't have a printing press, right?
Yeah, I have a copier. I pass off some 20s. Anyway, anyway, it's all like, you know, it's great to discuss. I love the debates that we have here. So, but everyone else who's watching us, they want to make money. And I don't know. I mean, I'm just taking a light shot on and think that maybe Powell might do something to stop this dollar advance, but most people think he's going to just be real conservative and, you know, he's behind the curve. He's not going to get.
I can talk to you about when the dollar advance is going to end in just a sentence, but that's not a timing indicator, and it's very, very easy. It's going to end when the market realizes, you know, it might happen in several months from now. It can happen from a year from now, when the market realizes that the Fed has absolutely zero intention to fight any inflationary pressures that might come through. And mark my words for that.
So that's something else Macaulay talked about, that he's going to talk about raising his inflation target from 2 to 3, that they'll tolerate 3%.
They'll tolerate anything that happens with inflation almost. Trust me on that. Because they have no alternative. In their mind, the alternative is much worse. In their mind. Of course, they're completely, they're completely, I don't want to say in real bad words, but anyhow, they have a huge misconception about, what's up with the economy and how they should handle it. So trust me, inflation goes to 2.5%. They'll try to make it a target. So it seems like it's not that they're not doing something. It's like they don't feel they should be doing something. Is inflation going to go to 3%? They're going to do the same thing. So that's when the market is going to actually sell the dollar.
Okay. Chris Schmidt, we're not missing what's going on. So I just want to let you know we're not. I guarantee you that the whole team is.
Here, let me go ahead and take over for a minute.
What are you up to trading?
I was just shorting the dollar Swiss, a lot of it, and then I got out of it. Now I'm just gonna. I've got a little bit of euro long and a little bit of Kiwi long ahead of Powell, whatever, his testimony. So let me go over to the charts really quick, and I'll just take over really quick before Steve goes on his rant about the dollar, which we have Canadian retail sales coming out in just a minute, but the euro just hit an 88% retracement. It bounced. The China news that just came out is basically retaliatory. Thank you. steps to the U.S. tariffs. They're implementing their own tariffs. So you saw risk appetite in stocks just they just slumped, and as a result, you get a rally in the euro. Okay, the euro popped up. Okay, euro popped up. The cable just kind of popped up too. I think the cable's just kind of stuck in Brexit la la land right now. The Aussie obviously came down. The Kiwi came down a little bit, and the dollar mex spiked up. You see the euro Mexican peso is now risking a big breakout. I just tweeted this chart just a minute ago, and somebody tweeted at me and said, "Oh, Blake, I thought you meant something different when you're looking at this chart." You have to understand that the euro is a funding currency. The ECB has had their rates at zero, so no one wants to hold euros. Everybody's going to sell euros and buy something else. Like in this case, I'll buy Mexican pesos because Mexico's rates are at 8%, Europe's at zero. Well, if I sell euros and buy Mexican pesos, annually I'm making 8% on my money, minus all the other. I'm just giving you guys rough estimates without getting into the nitty gritty. And what happens is if stocks start to come down or risk aversion starts to rear its ugly head, people need to repatriate back into euros and they're going to sell Mexican pesos. In essence, what happens is the euro Mexican peso will rally. Okay, so if we start to see a rally above like this downtrend line, and I'm actually specifically looking for 2220. If that breaks, my 2 cents is stocks are going to come under tremendous pressure. All right, you're going to see the stock market really, really buckle under some pressure. I do expect this move to happen this fall, not necessarily today, but obviously today here we go probing this really big trend line as stocks came under pressure after that China announcement, and plus we have weak Mexican GDP, and you see the euro Mex go whoop, spiked right up to resistance. I do think the euro is very capable today of rallying, especially if Powell comes out and he bends a knee to President Trump and and is dovish. You could have a euro that trades up to a 111, especially given the fact that the euro not only could reverse, but what happened here with the euro is you have to imagine we broke all this support, stopped out anybody who was long, and now we're reversing. So if we get a dovish Powell, this is what's going to happen today. We'll probably close at our highs and well above 111 by the end of the day. And like I said, and that's if we have a dovish Powell. Stocks are on. Hold on. China to impose an extra 5% tariffs on soybeans. Wow. China is not messing around here. So if Powell might be sitting there right now in the green room, rewriting his speech that he just had written, going, "Oh shucks, I got to retool this thing and make sure that stocks don't completely implode with what I was going to say." He might be rewording some of his speech right now as we speak. Scratch, rewrite, give this to the teleprompter. No, give me back my old presentation. Here's the new verbiage. That could actually be happening as we speak, because Powell might come out a little bit more dovish just to support markets. And because let's face it, if he doesn't sound dovish, the risk of the S&P being down 4% today is pretty high. We're down 0.25%. I mean, the S&P could trade down to we could lose 80 handles today. If he comes out too hawkish. I mean, let's face it. I mean, we could do one of these. We could sell off another 2.5% from here. That'd be realistic to me. All right, so the Fed chairman has to walk a very fine line today, and I think what he's going to do is provide dovish commentary, make the market believe that there's more interest rates coming, interest rate cuts coming the remainder of the year, and that's going to support this, sell-off that we just saw in equities and these retaliatory. I can't say. Somebody, Dale. I'm just kidding. You guys know what I'm trying to say.
Well, you know what, Blake?
I'm dying on the vine over here. Somebody help me out.
What it is, as a Marine, you don't have to know how to say it. You just have to know how to do it.
Damn straight. That's
all right, buddy. So it's retaliatory.
Thank you.
So it's the guys behind the bunkers that aren't in harm's way that give the orders, right?
Right. Exactly. It's it's funny. I was actually having a conversation with the managing director of Gellos Capital, and we were just chit-chatting 2-3 days ago, and he goes, and he came to me and he goes, Blake, you were a Marine, right? I said, yep. He goes, and he said this to me. He goes, dude, you are like one of the nicest guys I've ever met. And he goes, every Marine that I've met that has seen action is usually, it's like
rough.
No, just a nice person.
Oh.
And he goes, it's just crazy to me. And I'm like, well, look, the people that then this is generally speaking, obviously it's not, this is just me speaking in general terms. If you ever meet a Marine who's seen that, like I wear a combat action ribbon. That means I've seen combat. I've been under fire, return fire, blah, 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 blah. I'm a bona fide combat veteran. Most combat veterans that you're going to meet are not really gung-ho. We're the ones that you're not going to really know that we're Marines or combat veterans, whether Marines or Army or whatever. The ones that are desk, we call them pogues. One who was behind, they were back in the rears, and they were maybe passed out. They worked in the armory or something. Those tend to be the most gung-ho ones, the ones that haven't seen action. And it's the same thing as like the people that the people that like, if you've been to war, or in some sort of conflict, you don't really want to go back, and you kind of know what it's like, and know what it's like for the people involved. When people that haven't been in conflict are the first ones to usually speak up and say, "Oh, let's go to war." It's like, does that make sense?
Yeah, it does.
It really,
like
I said,
it's glamorous until
you're doing it. Yeah, until you're in the shit, and then you're like, wow,
I love that movie Glory with Matthew Broderick of Civil War, where he commanded a black regiment. Was really
I never saw that movie.
Oh, you got to watch it.
Never saw it. Anyway.
Anyway,
a different topic.
I can testify to that. An amazing movie, indeed.
Okay. Well, so let's talk really quick before Steve comes on, and let's talk a little bit about this Canadian. This Canadian's at risk of breaking out. We have Canadian retail sales. Now, we've been probing this downtrend line all week, and there's a person in our chat room who's pretty hell bent on trading only the dollar Canadian. I'm like, listen, whatever you're doing with the dollar Canadian is your prerogative, but if stocks go up, the dollar Canadian is a short. If stocks go down, the dollar Canadian is going higher. It's pretty simple. There is data like today, the retail sales might move the needle a little bit, but the overall theme of this currency pair is going to be a risk off, risk on tool. If stocks go up, which, Powell dovish, stocks go up, dollar Canadian is going to be a short. Powell is hawkish, stocks go down, dollar Canadian's going higher, and you're going to see stocks go down, dollar rip, that type of thing. So just try not to get too worked up in the minutia of like, oh, the data was so good or so bad, I got to do this. take the overall theme of like, if you're trading the Canadian, what's happening on a macro scale globally, it's going to be more affected. By the way, crude's under a lot of pressure right now. I don't know if you saw crude.
You know, I've been talking about the short side all week. You know, it's down hard, and yet it hasn't even broken down yet. If you look at it daily, the breakdown's going to be 50-58. You know, and that's how we get to Gregor's targets that he has way down there.
Yeah, we've been, you know, all week, and in even the basic technical analysis, we referenced, you know, this the crude downtrend line right here.
Yeah.
Couldn't sustain a break above the 200-day, 50-day moving average.
Right.
And here we are, you know, rolling over. Now, I do think that, you know, crude's got a lot of support down here around 50-50. Break below here could be quite ugly, but you know, these are things that I think you have to pay attention to if stocks get a little squirrely, which they are, by the way. If you're looking at the equity markets right now,
they are coming in triangle, so that has bearish implications. Crude on the daily.
Descending triangle. Well,
which means, yeah, you have a flat line at that support you're talking about.
Oh, yeah. I call it a bearish.
You got it there.
But yeah. That is, and eventually it should break lower. That's
the
higher probability that it will.
Right.
Not saying it won't, but
look, anything could happen. That's just how it's defined.
Yeah, it's correct. I always like to throw probabilities out here. 30% chance it goes higher. 60-70% chance it goes lower, something like that.
Okay.
You know, when I see
having a bookmaker with us.
Yes, exactly. You can go ahead and wire your money to me.
All right.
Okay, sorry. So let's go real quick. I think you got to pay attention to this this dollar Mexican peso. It's really quite strong. Look at the Euro Mex is breaking out right now.
You've been constructive for weeks now on this.
I bought the Euro Mexican peso yesterday. So, but I'm tempted to sell it here because I am a little worried that the, you know, Fed is going to, or the Powell is going to be a little bit more dovish. You can put it that way. Yeah. And then, you know, matter of fact, I'm going to go ahead and take that off right now. I bought it at 21.80. Because I have to adjust my cost average every day. 21.84, I think I bought it yesterday. Yeah, like right around here. So yeah, but my P&L adjusts every day, so I have to retool where I entered. But this is the perfect exit for me right now. And again, I could re-enter on a breakout if I think stocks are going to implode. The FX market's probably going to stay fairly quiet for the next hour and a half because that's when Powell's speech will be out. So it doesn't matter what happens in equities at the moment. Equities will come under pressure, which they are, you know, but I don't think the FX market's going to be big in response until after Powell does his little ditty dance. So with that being said, I'm going to pass it over to my colleagues, guys. If you like this webinar every day, make sure you visit Forest Park FX. They are our webinar sponsors. First place you should stop when you're searching for a broker because they're going to help you find a broker that suits your needs. So and also you can be involved with ForexAnalytix in our reimbursement program. So Steve, it's all yours, bud.
Thank you, Blake.
Thanks, guys.
Thank you, Blake.
Good
hey,
hunting.
Stelios, great at TGIF, and have a great weekend, guys. Thanks.
You too, Blake.
Okay, so we have Canadian data in a minute, so let's go through that first, and then we can chat a little bit about the Fed and Mr. Powell. I'm always tempted to say Janet Yellen, but no. So we have the data. Ahead of that, let me just mention that the Italians have until Tuesday to form a coalition to go to the president with a potential coalition. So both sides, the Lega Nord side and everybody else on the other side, are going to be furiously trying to make to form a government. So we should keep an eye on over the weekend. I'm sure there's going to be quite a bit of talk and news out of that. So Tuesday is the deadline. Okay, let's have a look at the numbers. It's just retail sales, isn't it? But it's an important number.
Yeah, let's see. Canadian retail sales expected minus 0.1 month on month, and core retail, there we go. Oh, core retail sales a lot stronger, but we have downward revision. Let's see how the market reacts. The USD CAD is pulling back. You can see it here. Let's go down on a 4-hour chart actually, and see how it's reacting. I'm not expecting a huge reaction, and for one reason and one reason only. Market participants don't want to take any dollar risk ahead of Powell in 1.5 hours. But you can see that once again we get rejected from the same resistance area just below the 61.8 at 133.50. So let's also mark it with the trend line here. You can see it like this. So far this is capping the market, while at the same time we have this ascending channel support that is supporting the market. So it's you don't need to be a rocket scientist to realize that probably following Powell, USD CAD is going to break out one way or the other. It's either going to break down from this ascending trend line support, which currently passes from 133, or it's going to break higher from 133.40, 133.50, and head higher. Blake mentioned before, how USD CAD usually moves in combination with risk. I didn't want to interrupt him, but I want to remind you that up until a few years ago, it was the correlation of the USD CAD with the VIX was very, very famous and very, very strong. So yes, that is a testament to that. It's not as strong as it used to be, for sure it isn't. But yes, definitely, risk on usually brings lower prices in USD CAD. The risk off moves it higher. So let's see what's going to happen following Powell. Stelio, anything else from?
Yes. The main thing that concerns me at the moment, and I think most people, is still the Fed and the dollar. And just want to recap. We had the hold on, my kids are shouting. 1 second.
Yeah. By the way,
okay.
We see that USD CAD is testing the highs once again. Despite the strong retail sales.
Yes. So basically, I was going to say that we had the FOMC minutes a couple of days ago. They didn't give anything new, although they did mention that there were 2 or 3, I think, participants on the committee who didn't want to cut at all, but there were also a couple who wanted the 50 base point cut. I think we can all agree that Bullard is one of them. He's a voting member, right? Yeah, he is, from what I remember. And he said just a few minutes ago, actually, that there's going to be some serious discussions about a 50 base point cut in September. So I've been thinking about all this, and I've been thinking about what's been happening with China and these news about retaliatory tariffs that from China we had about 30 minutes ago. It doesn't look like things are improving in the trade wars. So what can Powell do? What can the other Fed members do? What's the most possible, most probable outcome? Do you think people are going to become less dovish, or do you think people are going to become less hawkish? I think you have some people voting for a 50. I don't think these are going to change. The others who are voting for no change, I think that's more likely.
Some of them might lean in that direction,
yes.
Especially if we keep having some bad economic news, and definitely, if the path of stocks, start being lower once again.
Yes. So I think the risk is for FOMC members to go towards the dovish side more and more and more. So
I am 100% in agreement with you, Steve.
The market is pricing 25 fully for September. And I think that's fair, and we will probably get to the point, just like the
that's
previous.
The minimum, probably, yes.
Yes, where we're pricing, 3-4 more basis points, so a slight chance of a 50. I think that's what's going to happen, and I will not be surprised if the Fed actually does deliver a 50, especially if we've had zero progress in trade talks until then. So
they're going to use that as an excuse once again.
Yes. I mean, like you said before, very correctly. the only problem that they have with cutting massively is that the stock markets are at highs, or not all-time highs, but very close. So it's counterintuitive to be cutting rates when the stock market's doing really well. But their mandate is not the equity markets, at least not their official mandate.
Really? They should really change that, to be honest. Not for any other reason, just for honesty.
Yeah. So my humble opinion is I'm still bearish a dollar, not against the euro necessarily, because I don't like the euro either, but I still think we're getting close to a top in the dollar eventually. Maybe Jackson Hole is going to be the trigger for that. Maybe not. Maybe the September FOMC will be, but I think we're getting there now.
Yeah, let's see. Following, by the way, having to do with stock markets, and since, as we've said plenty of times, obviously the S&P is the barometer for risk. There's no question about it. From the current technical formation, I see two ways this can be resolved. One of them is, a break above this triangle, in which case I'm going to expect a rejection anywhere between 29.60 and 29.70. So I'm going to actually be shorting these levels if we get a break higher. There is also the chance, if for some reason Powell disappoints, I'm very skeptical about that, but let's see. Then the alternative is to short a breakdown from this ascending trend line support, currently passing roughly from like 28.60, 28.65. So, I'm still of the opinion that I'm looking for lower prices, at least in the short to medium term in the S&P, and I'm willing to either sell it higher or, sell it after it breaks down. So my basic plan for trading this hasn't really changed in any way. Now, nobody can predict exactly how dovish Powell will sound, and if that is going to be satisfactory enough for market participants. As I said, I'm assuming that he's going to try to sound dovish, but I don't want to position myself ahead of that based on assumptions. But I will definitely be willing to react to whatever I hear that he says accordingly. And the S&P is one of the tickers I'm closely monitoring at the moment. Another one, if you do like, and that was the chart of the day, I actually did that yesterday. Another one, if you like to have some position in the dollar, yesterday, that was the chart of the day that I posted. It's the cable, actually. So the cable did break out from a possible inverted head and shoulders formation. It pulled back earlier today. And I do think that if Powell succeeds to be dovish, another spike higher here to retest this key area of resistance is quite likely. Now, I don't want to be the one that is going to advocate to anybody to go against the trend. So I have to tell you that, a spike higher to retest 123.80 to 124 key resistance there's a good chance that that's going to create a reaction lower, because don't forget that the cable, at least as long as it trades below there, remains in a downtrend. We will have anyhow fulfilled the inverted head and shoulders target if we make it up there. The target is roughly at 123.33. I do think that, if you, for some reason, you like cable and, you want to be long, in the short term, there is a decent risk reward ratio against the neckline to do so. USD CAD, by the way, is pulling back again from that 133.40 resistance area. But as I said, I think, that the USD CAD is actually going to make a move, and it's going to make it today. It's going to make it in 1 hour and 20 minutes, one way or another. Now, if we assume that Powell is going to be dovish, which is, a good possibility, and as I said again, meaning dovish enough to satisfy the markets, because there is no chance that he's actually going to be hawkish. It's all about expectations. So if he's dovish enough to meet expectations and above, then there is a good deal that we're going to have. The first case scenario that was showing in the S&P, we will probably break above this triangle, push higher in this case. At the same time, the USD CAD is probably going to be pushing lower from this ascending channel, seeking lower prices, having to do with the DXY. Let's have a look at it first on the daily chart. USD yen, as you see, still consolidating here. And not very pretty looking inverted head and shoulders formation there as well. So, the USD yen in that case has a decent chance of also pushing higher, at least initially. We were showing that on the 4-hour chart, I think it was yesterday. And here's the DXY. DXY, same deal here. I mean, same deal with what we've been saying for a long time. Still remains trapped within this slightly ascending channel. As a bearish argument, on the other hand, still trading below this broken ascending trend line. Support might act again as a resistance if we retest it. Below 98.90, the risk reward would favor shorts, for at least a retest of this ascending channel support, currently passing from 96.50. So, there is a decent chance that we're going to see a move lower from, from the DXY towards the channel's support. And, that can happen, and, the dollar will still remain in an uptrend. So, the dollar can easily move decently lower as a short-term move without really changing anything from a technical perspective in the medium term. For that to happen, I mean, for me to start being more bearish the dollar, I would definitely need to see a daily close below 96.30, ideally a lower low after a long period of time. That would imply a move below 95.84, because that was the previous low that we had here. Let me open the chat box and see what you've been asking for. USD CAD has a target point at 126.778. Sell, says Oswald. Can you please cover gold as well? Yeah, absolutely. I'm going to cover the metals and crude. Come on, let go crude. Hit 50 today. Don't forget that 50.5 is a key support area. I was showing that yesterday. No real need of me showing it today. Again, not for any other reason, because Blake showed the exact kind of thing I'm looking for. I mean, there is, coach mentioned it, there is a descending triangle, flat bottom triangle, because, the support is horizontal. And that support comes at 50.5. So 50.5 is going to be a key level, for the bearish to break. And yes, if that happens for any reason, sorry, but my MacBook is really slow with so many screens connected on it. Still don't have my main computer. Until we, or unless we break below 50.5, this is just a consolidation here in crude. So I won't be doing something with it. We're literally in the middle of this triangle's range, right? I mean, the range currently extends from 50.5 to, let's say, 57.5, and we're currently at 53.70, literally in the middle of the range. So what would I be doing with this? Nothing. I mean, the other day that I mentioned it, I said that the risk reward favors shorts because, we're much closer to resistance than to support. But currently we're halfway. So not much you can be doing with it. Now, having to do with gold, I was viewing this as a possible ascending wedge. Initially, we broke down below it, but we produced no continuation. So there is a very, very decent chance that this is a much more bullish formation, meaning a triangle, right? There it is. So we might, just might, not have another leg down before higher, which was my initial assumption, there is a decent chance that we're just going to straight go higher from there. Okay. In which case, keep in mind that 1550 is a very important area of resistance, you know, in order for you to see why you need to actually zoom out on the chart and go back in time so you can see why 1550 is an area of interest, simply because it was a congestion area in the past. Many times the market rejected price either when tested as support or resistance from this area. So, you know, the more price action we get here, the more likely, the more we consolidate in time, the more likely that we're actually going to continue higher. Now, there is still a bearish scenario, again, a short-term bearish scenario, because I'm looking for higher prices in gold regardless. Now, the short-term bearish scenario is the following. Let me show it to you on the 4-hour chart. It doesn't look very pretty. It's soon going to start losing symmetry. It's the possibility of this, which is most likely a triangle, being a head and shoulders formation. Okay, in which case a break below 1493, which is the neckline, will indicate that there is more downside coming. In that case, I would be looking for a move lower towards perhaps even 1450 before higher prices. Okay, but as long as 1493 is holding, you know, you have absolutely no reason to be bearish, no reason. So you want to be bearish, at least wait for 1493 to be taken out from the market before you take a position, in my opinion. Okay, as you see, more or less an equivalent situation here with silver. In the case of silver, this looks a lot less like a possible head and shoulders formation. It looks a lot more like a bullish consolidation, a pennant, a triangle. You can call it whatever you want. It's actually both. You know, it's just a matter of how you want to name it. With the next area of resistance being the 161.8% extension of the last real corrective move lower at 1657. There is also this horizontal resistance area at 1770, just a little bit higher, just mentioning that. So gold and silver, if you're asking me, better position for a move higher. So, you know, the vast majority of the things we've been looking for would imply that we might have an initial reaction lower from the dollar and higher from risk, following what Powell says, which...
I like your looks in metals, Steve, because that would be a third drive up there and also some type of formation completion in silver up around 1780. And how's the gold silver ratio looking to you?
The gold silver ratio is following what I envisioned some time ago, Coach. If you remember, I was talking about
a C. We'd have one more push up, right?
Exactly, and it looks a lot like this is a likely scenario, something like this.
Yeah, and then down.
And then down. Yes.
Okay, so that means gold should outperform on this next wave up in.
As long as the ratio trades above 87.40 roughly,
right?
I would assume that a short period of gold overperformance is a likely scenario. Yes.
So gold would be the better short at the top if this plays out. If they both make new highs, the gold would be your preferred short.
Yes, I mean,
if you want to short it, I mean, a lot of people don't want to do it.
Strictly from examining the gold-silver ratio, yes, I would assume that would be the case indeed.
Thank you, buddy.
My pleasure. So now we covered the metals as well. I mean, the basic metals. What I wanted to talk about, though, I wrote that yesterday in the chat room because we were in the same situation, is copper. Because copper is actually, once again, attempting a bearish break, which will open the next downside objective at 244, roughly, as you see. You know, we retested that previous low, what was it, like 2-3 weeks ago, start of August. we're now retesting for the third time that support, but look at the latest bounce that we got. It was very, very weak. So I would assume that there is a very high probability that, you know, this level is finally going to break to the downside. Now, on the other hand, if you do like copper to the upside, you know, you have a magnificent risk-reward ratio to buy it right here, right now. But, you know, just because you're going to have a very, very tight stop loss. But it looks to me like it's probably going to fail and, you know, head to the next downside objective. Now, having to do with palladium, still closely monitoring palladium, still actively looking to be short palladium, you know, looking for a move like the one you see here, more probably large triangle trading. But, you know, after this move lower, this rebound higher so far looks corrective to me. Of course, you know, I want to see some, I want to get some confirmation, and that would imply that I want to see a breakdown from this ascending channel. Now, if that happens, I'm actually going to be taking this trade. Now, USD CNH obviously following what's been happening, as you see, testing all-time highs here with the next upside target, very likely to be hit, by the way, being the 161.8% extension at 1717. You know, obviously, the higher it moves, the higher the jitters having to do with, you know, the US-China trade situation. We know how sensitive Trump is to the exchange rate as well. He considers it an unfair move from the Chinese to, in essence, counteract the US tariffs. So, you know, higher USD CNH would imply higher tensions in this relationship. Now, let me have a look at your questions and see. All US indices are down at the moment, so how can Powell help? You know what they say, a rising tide lifts all boats. If I'm not mistaken, that's the English expression, right? So, you know, risk on, risk off mood is something that usually, you know, if there are not other esoteric reasons, affect the vast majority of the markets. Of course, some of them overperform, some of them underperform. But yeah, if we do get a hint of a lot more stimulus from the Fed, the vast majority of stocks are going to go bid. There is no question about it. Now, speaking of the DAX, I can tell you two things as a fact. One of them is that, you know, we've seen and know the importance of 11,800. We've seen it in action multiple times. So once again, this area is rejecting price action. But if you want to look at it from a bullish perspective, there is also the possibility, if the DAX wants to move higher from here, let me show it to you on the 4-hour chart, actually, because it's going to be quite clear here. Okay, where is it? Here it is. So if you look at it on the 4-hour chart, we can be forming here an inverted head and shoulders formation, right? In this case, the neckline is going to be roughly 11,840. So, you know, being short against this high makes sense. But if we break above 11,840, you can expect an extension higher, an implied target of that inverted head and shoulders formation. If we end up completing it and breaking higher, should take us at 12,200 quite comfortably. Until then, you can even view this as a range for the time being. I mean, 11,400 to 11,800, 11,850, a 450 roughly point range. You know, a break lower or a break higher from there should extend by an equal you know, amount of points. So in one case, we should be headed towards or even lower from 11,000. We have another support area here. in the case of a break higher, we should be headed towards 12,200. That's the situation here with the DAX. Until then, as I said, it's somewhat trapped. Now, there's another question. What is FTSE doing here? It can be putting in bearish consolidation, something like this. But somebody can also view this as an inverted head and shoulders formation, but it doesn't really matter, because even if that's the case, this triangle of resistance is also the neckline, right? So bottom line, to know what to do with the FTSE, I would be paying attention to this 7,080 support area. If we break below it, I think we should extend towards the next objective at 6,900. If we break higher from the trend line resistance, on the other hand, I think we should extend towards the next area of resistance, 7,360 roughly is what I have. Very good likelihood, especially here for the FTSE, because as you see, we're in a contracting range, that we're going to get some kind of a resolution today following Powell. Okay, so the DAX might take a little bit longer because it's within a range, but this one that's within a triangle that has tightened quite a lot is probably going to do its move today.
Steve, I have a request. I'd like to see your chart on US dollar won and what kind of upside objectives you may have as things intensify.
I already covered that.
Oh gosh, okay.
No worries. I'm going to show it to you again. My next upside area of resistance actually here is
720-ish, 5.
Oh, I opened it on the wrong chart. Nice.
Look how naked you are in that.
Yeah, exactly. So here it is. So upside objectives here. The 161.8% extension of the last move lower, which comes at 1717. Okay. And we can also, now that we've had likely corrective move lower, short-term corrective move lower, we can also fib extend
ABC,
this.
Yeah.
Let's see, there it is.
Okay.
And see where we get a 161.8% extension from that. That comes at 723.
That's where it's going.
So 1717 and 17, 17 and 723 are the next upside targets here in the USD yuan.
Okay, thank you, buddy.
My pleasure.
Just want to let you know, I know you have some time, but our guest is here. It's the first time Asher has been with us, so anytime you're ready to wrap, let me know, because we do have a guest
let me
today.
see if I have any questions I haven't covered, and if I've covered all questions, actually, no reason why you shouldn't start it. Let me see. Dale, Steve, please, your opinion on how the latest China news will affect the market. Okay, we've already covered that. I mean, Blake and Dale did. Okay, yeah, we've read about the China news. DJ says, screw them, Powell should throw a 100-point increase in there. That would be interesting. Steve, can you give your views on pound yen? Yes, let me cover them pound yen, and then I'm going to pass it to you, Dale. So here is pound yen on the daily chart. As you see, more or less the same deal with pound against the US dollar. We've already had a break higher from this triangle and previous confluence of support resistances. Does this make it bullish? Not really. I mean, I need to see a lot more. We haven't even broken above any serious level of resistance here. This can be another corrective rebound. So I can tell you that, we might extend higher, with the next area of resistance being at 131.80 and the one after that at 133.90. But, in all likelihood, after extending somewhat higher, I would expect another rejection as a likely scenario. So Yeah, you can actually make some money to the upside, in the days to follow. There is a decent possibility for that to happen. Not certain, because we're currently testing this previous spike low, so we might get rejected from here. But even if we extend higher, which might happen, I would be very, very nimble with my targets. Very, very nimble. Okay, because the pound yen is in a prolonged downtrend, and you should be initially viewing every rebound as a corrective one. Now, if something changes, we're going to be here covering it. I mean, if something substantially changes in the way the pound pairs trade, then trust me, there is going to be a lot more upside, because we know that the market is, extremely bearish the pound. We know that positioning is extremely one-sided. And trust me, if the pound actually starts squeezing higher, there's going to be a lot more upside. So I wouldn't be really, trying to bottom pick it. I think, waiting for confirmation here is going to still give you the ability to make some money, at least having a higher, possibility trading your hands.
Yeah,
Thanks,
and Euro Pound hasn't gotten down to downside targets yet either. So that's also kind of constructive the pound. So, and also, Steve, all we have to do now is wait one more week for the children to get back the hedgies from the Hamptons.
Oh, yeah.
And then we'll have volume. So just, you should never swing for the fences anytime, but especially now. Okay, and lower your expectations just for another week until markets become more liquid again.
We've said it many times. One of the secrets. Actually, it's not a secret. I mean, everybody should know and understand that. But from knowing and understanding it to implementing it, it's a different story. In trading, it is important to know when the right time to push positions is and when it isn't, right? Because if you trade bigger when the markets are actually moving and they actually provide like clarity, and a lot less when the markets are more quiet and there's a lot of choppy trading, then you're going to do much better. So it is extremely important to also pick the timing in in pushing with higher leverage, with more positions, and the timing that you might want to be out of the market, or just have like smaller positions.
Cash is a position too, bro.
Oh, absolutely.
Yeah, cash is a position too, and
that's why that's also a reason that you should never put monthly targets, in my opinion, unless you're a scalper. Because if you're a scalper and you just go in the market to capture like 4, 5, 6, 7 pips or whatever, then any kind of market is suitable for you. But if you are any kind of other trader, you shouldn't have monthly targets, because there are months that you should be doing very little trading and months that you should be doing a lot of trading. So, in a month with a lot of trading, you might have a performance that provide like for 3 or 4 months, and, other months you should be sitting on your hands.
We'll have a great weekend, partner.
Thank you.
I'm still waiting for you to promote me to senior
citizen.
Currency analyst. That's a big promotion when you're a kid. Oh, I'm a senior currency analyst. Well, I'm a senior citizen currency analyst. So, all right. So, Asher, I want to welcome you to our community, welcome you to FACE. I'm going to promote you to being a panelist, and then I'm going to unmute you. Okay. And should be able to hear you. The drop-down menu asks you what kind of mic you're going to use. So looking forward to hearing your voice, and want to thank you for being brave and just accepting the invitation to be with someone you never even knew before. And also to share your screen, you'll see a green box. You just hover your mouse over the drop-down menu and click it, and you would take the share away from Steve and show your screen. So far not hearing you and not seeing you.
Yeah, let's take it one thing at a time.
First of all, what's that red dot?
To be able to hear him.
Yes.
Which means that you should
Well,
choose
he's
the
a
right
YouTuber. He's a YouTuber, so I'm sure he's there. Okay, here's his screen.
Okay, we can see your screen, but we can't still hear you. So if you go to the panel, it should be at the top now that you're sharing your screen probably. The left toggle is the one to mute or unmute yourself. Exactly next to it, there is a little arrow showing up. If you click on that, it's going to give you audio options. So it's going to let you choose the microphone you want to use. Probably you haven't chosen a microphone or the correct microphone because we still can't hear you.
Okay, maybe now it's working.
Yes. Now we can hear you. Perfect.
I needed to change to the non-professional microphone.
Oh, okay.
You know,
All right. Yeah, we could hear you fine now, sure.
okay, excellent.
All right. So very nice to meet you.
Yeah, thank you for inviting me.
Yeah, well, you know what? I saw a tweet you did, and then I watched your YouTube video you had on that. And what attracted me to invite you as a guest was I could tell that you really love the puzzle and the mystery of the financial markets. You know, it comes across in your demeanor. So when someone really loves what they do and the mental exercise of predicting and trading markets, I wanted to invite you to be with us. So thanks for taking the risk as a trader. It's not a big risk. You're not going to get stopped out here, right?
Yeah.
So here's my first question.
Yeah.
What came first, Asher? Your interest in the planets or your interest in the markets?
It's a very interesting one because if, as a mature person, the interest in the market, but if I'm looking really back back to my childhood, I started first with astrology, but as a very superficial, you know, very beginner.
Yeah.
And I always was fascinated to the mystery, understanding people, consciousness, what's differentiating people between each other, and until the ability to see a person and to feel more characters of him as a combination of different frequencies that today I explaining by astrology. So I invested for the last almost 15 years in stock market. Mostly it was at the beginning, at least until the last 3 years, it was mostly failures. I followed all the technical analysis procedures and learned with very good teachers, learned a lot of different patterns and using platforms. And when it came to my money, always something occurred. And I was very risk taker. And, you know, finally, in 2015, in the summer of 2015, we remember how bearish it was this summer, August.
Yes.
And this was my last, kick that I needed to rebirth with my investing point of view ahead. And then I started to look for other alternatives. I realized that maybe it's not that someone is pushing the button or managing the trade against me individually. I always had a feeling like, why I see people that are succeeding, and when it comes to me, I don't know, it's always felt to me like someone is watching my options open or my trade and doing something again. Suddenly I realized that it's not possible. This is a collective consciousness here, and
right.
This is one amount, you know.
How about this? A guest once told me that the market's job is to convince you it's something that it's not.
Yeah.
What do you think? So, you went through what a lot of people went through after 2000 and 2008. They decided, you know what? If anyone's going to lose my money, it's going to be me, based upon my work, not based upon anyone else's work, based upon what I see, when I see it, and you can't be lazy to be self-directed. You know, people talk about they have the secret. Isn't the secret whether you're using astrology to trade the markets or you're an Elliotician? The secret is hard work and perseverance and living through adversity, isn't it, buddy?
Yeah, I learned to combine both words, earth and sky, because I realized that I could listen to all Bloomberg, CNBC news all over, understanding what the professional that even using terms in economy that I never really understood, but it never really bringing to me the entire picture. When I started to investigate, I dedicated 2 years of my life, and I'm still doing it, but now from another mode, to investigate all history and cycles through the astrology. And it's a very long school curve to what I studied so far. And in the beginning, I started to share it voluntarily, the process of the things that I'm seeing and what expecting. And every failure or misalignment with the things I read in astrology, combining with a technical analysis, brought me to another higher level of accuracy and finding and learning from this mistake going forward. This is very interesting.
That's a process.
Yeah. And
so, okay,
yeah.
so 2 years, 2 years of just looking at cycles. You know, when you think about it, some of the, you know, you could even go back to the Bible, Daniel, or you could go to the wise men. So, you know, astrology is not a new thing. I'm sure Joseph probably knew a little. He's my hero as far as the best commodity trader in history, who stored up the wheat knowing that there was going to be a famine, or there could be one. So tell me about, I know a lot of your work is proprietary and I respect it, but tell me about some of the breakthroughs that you made with cycles and maybe how they apply to some of the things that you're seeing now. I see you brought like a little bit of a PowerPoint for us. So
yeah, no,
I'm going to shut up for a while, buddy.
This is I just will show you just, I'm every Tuesday doing to my members a weekly forecast to nail the projection of the movement. This is what I'm doing Tuesday for oil and gold. And on Thursday, I'm scanning the main crypto. So actually, I'm looking on both the technical and the astrology and creating sort of a calendar. The calendar is representing the dynamic that I'm watching through the inner planets. We consider the inner planets and outer planets like Uranus, Pluto, the bigger planets that are outer are relating more to the environmental and to the background, or like the main trend or the long term. The inner planets are that I'm putting in the calendar are more inner planets, that this is something that you can see now green, but maybe we are just in a long-term downtrend. So this is what is it. And then I'm showing to a different perspective as daily, for example, this was for gold. You can see a little bit beyond here, but this is what I'm expecting, for example, as projection for the coming days. Okay. And I combining my technical analysis today with definitely a revolutionizing ability to measure and how to look and read the technical, because what I'm doing, I'm receiving, I will show you another example.
I like how you call it astrology instead of astrology, using the first letter of your name. Asher Astrology. So you're a marketer too.
Yeah. Yeah, so just a second, I want to show you, where is it? Yeah.
Just out of curiosity, is today a big day in the planets with Jay Powell speaking in about 45 minutes?
Today we are starting Virgo. So I just spoke in another video that Virgo sign, the sun already in Virgo, and Mars and Venus already entered the last days too. Virgo is related to purging, to making order, to put things in their place, and to do diet, to earn detoxing. So I think that with the things that I'm watching, the U.S. is going to do a lot of necessary work now in order to clean the bothers and the disruption to the U.S. economy. I called to the Leo season, which was until the last days during August, the top of the trade war. And Leo, Lions, this is what actually we saw, very big powers against each other, very fire element, very, I say that.
Oh, that's a video I saw. You were talking about.
A lot of blood was parking around, and I thought people try to avoid such a risk because people are going to get dirt without expecting. Now purging time, Virgo time, we're going to clean some hands. And I think that Bitcoin is also sort of a disrupt to such.
So you think the trade war tensions are peaking based upon what the planets are speaking to you? Because we had that news about China today, the retaliatory actions that they're going to take.
Yeah, actually, China is going to be seem to be defeated in a way, and finally, toward the next month of September, even the middle of October, I think that it will be a little bit of a Forex feeling to the U.S. and sort of bringing back to control the environment, and something suddenly is going to be shift. From this October 2019, oh my goodness, to economy. Mercury will be retrograded and in Scorpio, and on Venus itself. It's not going to encourage. Saturn and Pluto are going to start moving direct before meeting in January 2020. The last months of this year, the last 2 months will remind something of the last 2 months of last year, that everything fell down. If we remember, yes. Gold and oil and stock market together. And I asked, among others, where the money goes when everything is that much falling. Now, you are seeing this hyperinflation happening with the USD, and it's fascinating to find the correlation between the oil price, what actually I just brought here quickly. You see the indices of oil that is very much correlated when the oil price, they are moving direct together with S&P specifically.
For a while.
Oil. So together with the minting of USDT that is now used by other powers, probably China, to act as an effective trade war. I don't know, this is so too complicated to understand the results of it. But what I wanted to tell you for the previous question, how I'm looking on cycles. This is, for example, as you see, the sea boat based on its natal chart, and here it's OPEC, and I'm looking on different aspects. It's like, this is the not 100% of my reading, but pretty much higher percent than other things, because it's based on my interpretation. And I know about exactly on what dates the planets will do certain aspects. So I need to look together on the technical chart, and then I start to combine the dates and the triggers of timing with my grid that I'm creating. So in gold example, this is just of the last video I did. That's something that I could draw as an offer projection. And I was speaking already since time ago that gold is going to maintain the heights between the 1450 to 1500 until almost the end of August. And interestingly enough, they are very much correlated with the Bitcoin price that is, again,
gold and Bitcoin are correlated?
only Bitcoin and gold right now seems to be an alternative asset
Okay.
to the U.S. strategy, sort of, but
To the dollar.
yeah, it's so corruptive to the things that I've just discovered in yesterday crypto forecast that it seems that Bitcoin is not going to anywhere from here, at least in the coming year. And even it will do some percentage up and down, I don't see it going as many YouTubers are speaking to go to 20K and above.
How about down to 7?
This is now Bitcoin is ruled by the same wells that are running the stock market, and billions of dollars are running there. I'm following one in Twitter that is called Wells Alert, and you could see all the huge millions and billions. Just the last hour, I saw one transaction of $300 million of Bitcoin from one wallet to another. So who are holding those such amount? It's become disconnected from sort of a collective consciousness, because Bitcoin born to be a social money or to give.
Yeah, it was supposed to be for the unbanked little guy, and now it sounds like it's being moved around by huge funds.
Exactly. So together with
they take over everything.
Yeah. So together with what is expected to happen in the global economy, and the condition that Bitcoin is right now, will.
I have a question for you. 4-hour charts, and it's great to be able to call like $20-$30 move in gold.
I will show you this one. This is this is already.
Oh, interesting.
This is what I showed actually in June 25th. And you could see here in June 21st, 23rd that I expected a higher price.
Right, okay.
And later, and then I expected to continue.
Yeah, so we haven't gotten that. We never achieved that 1350 level, or you have option A, option B. Okay, so do you feel that macro, because I've been looking at this, and people hated gold at 1150, 1250, 1300.
This is another thing that you want to
everyone loves it now. So is it possible, when you look at monthly charts, that we've only rallied a little bit more than 50% back from the high in 2011 to the low at 1050? I forgot what year that was, 2015 or so. That this could just be a bear market rally in the metals, or is this the beginning of a huge multi-year bull market in the metals, based on your work?
I just want to make sure I understood your question. You are asking if what I expect to come down in the end of this year will be an official bear market?
Just kind of a big picture look on gold. Could it possibly be, instead of the beginning of a new bull market, and we're going to take out 1900 and some of the super bulls in gold, that all we've had is a retracement of the move from 1900 to 1050?
Listen, first
you know
of
what
all,
I'm saying?
Yeah, first of all, I'm tending to stand with 6 months ahead prediction, because if I think about prices, I really needed to base some good alignment with technical. And the far I look, I miss the zone, like
I understand that 100%.
So there are very significant aspects that are happening through the planets already from January, and we are entering totally to a new world and region of actions and perspective, and it could unfold in many different ways that very risky and difficult to duplicate or to consider things that happened in the last 10 years to what will come now. Indeed, things are working in cycle, but we are going to come out gradually from the Capricorn zone. So Capricorn is the old school way. And once we will enter to Aquarius, this is the alien sort of environment. This is
When's that happen? The beginning of next year?
the end of next year.
End of next year.
Yeah, of 2020 and toward 21. This is already when Saturn will move to Aquarius. It will be a big shift. Now, in this January, we will have incredible concentration of planets in Capricorn. So, first of all, it's also Capricorn is cold, is tough, is hard, is the sign of the winter. And we know how animals are behaving in the winter. They need to stay in home and to have enough supply of food, and etc. And it seems to me like speaking about recession or very hard to leave time. So it's sort of to get prepared to a very, also in the weather, very cold, freezing winter. To what is
Ice age, you know, there are a lot of people talking about that instead of
sort
global
of. So it will be really difficult even for supply or providing food in supermarkets, probably because of this, or maybe different structures will be in reorganization, or I don't know.
Okay.
We need to prepare. But after this, something is rebuilding inside it. It will be very interesting and restructuring start of process, like cracks in the ice during 2020. And it's very difficult still to assume from this point, because the most interesting things that I'm expecting is from March 2020. And I need a little bit 1-2 months ahead in order to understand how it's going to unfold. And yeah, this is, for example, I'm showing a very general without showing the little moves, but we can see until October. Very interesting time, October, that gold seems to go to the minimum, or probably to the level of the 1350, 1330 levels, as you could see here.
Okay. And
then something is happening. And you see it's sort of a little higher low in the beginning of November. And this area between the end of November to the beginning of, the end of October to the beginning of November seems to me very correlated with things that I'm doing to the S&P. I'm also creating
so possible tops in the S&Ps and bottom.
And then gold will continue going higher. And from here, all option in December, I see drastically the stock market falling and the gold going higher. Now, to where higher, I would need to see.
Happy Hanukkah, Merry Christmas.
Yeah, but more to, it will be a sort of duplication to the last December.
Okay.
We had that is a sharp shift of direction.
So what's the best way for people to follow you? Is it Twitter, or do you want to give out your website? This would be the time for you to show for people that hear us live now or watch a video later how they can follow your work.
I actually have
become a subscriber, or whatever.
I have actually my Patreon channel that is patreon.com/astrofinance. I'm sharing different videos, very valuable one, every Thursday to crypto, every Tuesday to commodities, and every Monday a general world astrology that I'm sharing 2-3 days after in YouTube. I have my YouTube channel. Just Google Osher Astrology and you could find me in different places. And
have you written any books?
Any books?
Yeah, have you written? Huh?
What about to study what?
About trading, planetary trading, or anything like that.
I developed it myself, and hopefully, once it's all set, I will write the books. I came here to bring something new to the world, and not to replicate things that were before.
Okay. Well, you did bring something new to face, and that's your face. So. Appreciate you coming here today, and like it or not, Asher, you know, you're now my trading warrior brother. That everyone's knighted with that comes and speaks to us and shares their work and edifies their community. So it was great meeting you, and wish you much success and may shekels rain down on you and everyone else that follows your work.
Thank you. Thank you. Thank you
Okay,
very
so
much. Appreciate.
all right, great meeting you. Shalom, Asher, and let's get back together maybe late this fall or early in the winter and see what happens.
Yeah, even before that, before the winter starting, I think it will be very interesting insight to look forward.
Okay, so yeah, you know, I'm in California. We'll see how cold it gets here this winter. But
Let's see how strong the earthquakes could be there.
that too, yeah, we're already we're rock and rolling right now, having a few. So yeah, everything's going to happen, isn't it? You kind of see that we're really entering a time of turbulence, don't you?
Exactly.
All right, so you know, you have risk taking no risk right now. So why not take risk? What do you think?
I suggest in general view to be flexible as possible right now, like not to commit to something that could lock the door on you.
Yeah.
So whatever strategy a person is taking now, whether it's to move to another apartment, starting a new contract, try to do it temporal because the changes are imminent and strong enough. And this is a time that many people are going to or ask to follow their higher calls, things that were tight, we always wanted or felt called to do, but some fears controlled us. Now it's a real time to follow them, because this is what more
We're here for. We all have a mission.
Yeah.
He's got a plan. This is part of it, and he's going to finish what he started.
Yeah, and actually, like the animals, what are doing, you know, they have a sort of a natural GPS that understanding the direction, and this is a very awakening time. I guess Uranus is retrograding now, and lies and secrets are going to come up from different medias and stories of our life, also from our personal life. And we need just to go with our real truth, because people so far are, or still are, sort of zombie and very much programmed. And speaking about the Jupiter-Neptune square, which is the last time in September 15, next month, and this is the highlight. It was all this year that people trying to be in a euphoric mode, everything is fine. And this is a moment of awakening, at least to awake to your own desires and what a person deserves, more than just trying to keep on the trend that the media is showing him to believe or follow.
Can we simplify this? Follow your heart.
Yeah. You know, people are zombie to Bitcoin specifically.
Yeah, zombie to money.
But in Aquarius time, we will, before it, we will realize that there are so much better things that even we're not appreciating now. And this is also a place to think about what is going to be the next value. We're going to move from such a conventional trends probably that everybody are trading. It's going to be another.
I don't know about you, but I believe this: money comes and goes. Time is gone forever. Make it count. And that's being a cancer survivor. Okay, so anyway, really a pleasure meeting you, Asher. Let's keep in touch, and the video will be out on Twitter 2-3 hours from now.
Excellent.
So, best of luck to you.
For you too.
All right, great meeting you. Thank you, everyone, for a great week. Remember, don't just count your pips, count your blessings, and we'll see everyone Monday. Adios. Thank you again, Asher.
Bye-bye.